Welcome back to the channel, everybody. Today I'm joined by our very favorite stock equities analyst, Andy. Andy is going to go over one of his very amazing plays from this last Friday on Costco, and I am very, very excited to be here and hear about it.
What's
And
up, everybody? Hope you guys are having a wonderful weekend.
thank you for being here, Andy.
Thank you. Thank you for having me. I can go straight into how I got into Costco basically for the trade. So I saw the earnings this past week that they're having. So we have a earnings chart in OBR, so we made our own earnings chart, and I was looking the best possible earnings to get into for the week, and looking at the chart, the best one was Costco because the reason why was I was looking at the standpoint, November, we had a lot of people going to stores, buying for Thanksgiving, even Black Friday shopping. On top of that, Christmas shopping. So I'm
Yeah.
like, this is actually a really perfect, probably opportunity for Costco to have really good earnings. Another thing is, I'm just going to show this chart as well on tip ranks. I'm going to change my screen right here real quick. As you can see right here, for quarter one of 2022, their EPS was what people expected was very low. So I was like, comparing to quarter four, it was very high. So I'm like, this is actually might be a really good earnings because with this low EPS means we can actually blow this out of the water. And what happened was it did. And another thing was I also compared it to their another sympathy stock is BJ's, which is another wholesaler like Costco.
Right.
So it's a perfect trade right there, trade off, and they also beat their earnings. And let me go to
For
earnings right
everybody
here.
that's not aware, could you explain what EPS stands for?
EPS is the earnings per share, basically how much they're making per share within that entire quarter. It affects. So basically, I looked at the earnings, even the revenues for that month. It was very interesting to see because uh, when you go to the charts, which I'm going to show in a bit, BJ's blew everything out of the water, and I was like, because I was sitting in live call on Thursday before the earnings trade occurred. So I was sitting in live call talking to everybody, even talked with Austin and Clayton. I was like, I think Costco might blow earnings out of the water, like it's very plausible. And then somebody brought up BJ's, and I totally forgot BJ's was a wholesaler company as well. And I was like, so let's take a look at BJ's chart. So if
Right.
I change, bam, let's go BJ's. As you can see here, let me zoom in a little bit more for you guys. As you can see, before earnings, I have this chart right here laid out perfectly where we're in this downtrend. And right before earnings, after the market close, we had a huge amount of low volume occurring within that day for BJ's. But after the market closed and earnings released, they just blew earnings out of the water. And out
Obviously.
of nowhere, they just gapped up.
Yeah.
And I was like, wow, this is actually really good. I was like, okay, $70 the price target for a lot of people. Even when I use tip ranks, I look at price targets from people as well. So let me type it back in to get the price targets. Oops, wrong one. BJ. So like $75 was the price target on tip ranks that I had. 74.09 was the closest it got to, but I was being conservative. I was like, oh, 70, 72 is pretty close actually. And then when going to Costco, I had the same chart layout as well. I had Costco charted out way before BJ's was. Looking at here, we had the same exact trend,
Same thing.
movement, same exact thing, and I was like, this is very, very like exactly the same. So I was like, all right. So if I traded Costco before the day, before aftermarket hours, I can two theses I created in my head. One, I can actually make money off this trade if what's it called if the numbers are right, but that was a
Right.
50-50 shot. So I was like, this is very, very risky, but at the same time though, looking at BJ's earnings and what they did,
You had reason to believe the earnings would do well.
yes, I had reasons to believe that. On top of that, another thing was I had to consider IV crush. The contracts were up 22% before even market was closed, before market was closed, and I was like, okay, I'm just gonna take profits here. The reason why was IV was pretty high actually. It was at 0.35, if you see right down here. And then we had a huge IV crush. Next morning, woke up, contracts were the same exact contracts I got into, the 550s. the 550 calls expiring this week, they jumped from 180 down to 80. So they to like $80. So like that's a huge bump down from
Right.
IV Crush. So I was like, all right, so this is a perfect opportunity because we saw good numbers and looking at their fundamentals of their review for the quarter of their wholesales and everything. I was like, wow, they actually really blew everything out of the water. So next morning, I caught the dip at the bottom when the Ivy Crush happened after that, bought contracts of the same contracts that I sold yesterday, but for very cheap price.
Right. Because that IV crush happened.
Yeah, the Ivy Crush happened, in which then, in which then I basically swung those to the upside. And the key thing I was watching for was right here, if whether or not we broke out of this downtrend resistance line, in which we did. We broke above it and gapped up really hard. Out of nowhere, big money volume started pouring in. This is like the same exact scenario that I've seen in Google as well. If you look in Google's past earning, let me go right here. Right here. Boom. So right here, around here this time, Google is doing the exact same thing, having very, very low volume for the whole entire day and the next. And out of nowhere, after the earnings came out, after hours, Google didn't make a huge move at all, but their earnings numbers were really good. Their ad revenue was really good. The EPS was really good. And the reason why it was so good, nobody really bought any shares in aftermarket hours. And it kind of worried a lot of people, but I was like, I think I know why, because right now the big money people do not want to pour money into this market yet.
Right.
They want to wait until the market opens, because for sure, Ivy Crush did happen the next morning, actually. Contracts were very dirt cheap, and I know a few people, even I did, got into Google's after that earnings, because I was like, this is very conspicuous to see that Google didn't make a huge move in aftermarket hours. It just stayed at that same exact level, 276, 278, throughout the whole night into the next morning until actually the market opened. Contracts flew down, then you bought those for cheap, then flew back up. Costco, same effect here. If I zoom in, same effect right here. As you can see, low volume, nothing at all. Next morning, after the earnings, having good revenue, good EPS and everything, had low volume as well. It was at 530s, 528s. I was like, I'm surprised that basically Costco didn't shoot up in aftermarket hours. So I was like, this is going to be really interesting next morning, because that's mean the big money actually wants to load in money when the market actually opens tomorrow morning. And which happened, I bought calls for cheap with the IV Crush, same exact thing like Google did. And it was a perfect play out.
Did you buy these at open?
Yes.
And what was the end result of this trade?
So the end result was that it ended up being 1,200% gains, 236% gains. It shot up to the highest I saw was 1,230 profits from
Wow.
$80. Yeah.
That's crazy.
Yeah. So like even I got into I swung trades as well. 550 calls for this week, and they're already in the money, and I bought them for $475. Those were the first calls I got into. Then I got into the 550s expiring within that same day for $80. So made huge profits from both of those because I was very bullish. I had a lot of high confidence. Looking at my TA, looking at the price predictions from what's it called, tip ranks as well, from what people analysts are upgrading to, because this like nobody would be upgrading a stock if they know for sure that it's not going to have really good earnings at all.
Right.
And for sure you have a lot of banks, even UBS, upgrading to like 580s, 600s. I'm like, holy shit, like wow, like that's crazy. 580s to 600s. I was like, damn, and we're only at 525 right now. I was like, this must mean that the earnings are going to be really, really good, or this is just like bluff or something like that. A bluff to make people be very bullish. But in reality, it played out exactly the way you wanted to. One mistake I learned from was Docu. They had amazing earnings as well, but it was just such a big loss because the sympathy from I think it was Snow. Was it? Snow gave a sympathy saying, yeah, we're not going to be as the same as during the pandemic times. And after the earnings, they gap down from 242 down to 131. Like it's a $100 drop
Yeah.
right there. Like it's ridiculous. And I was like, wow. And I was playing to the upside, and I learned my lesson that not all the time that you're gonna be winning. And the things that I ignored on this trade was that I had bear sweep calls alerts
Yeah.
from Benzinga, and they're saying, "Hey, there's a bear sweep call on Docu," and I don't know why I chose to ignore it, and I chose to ignore Snow, the sympathy stock within their ER. Uh, I was like, "Wow, I should not have ignored it." I played against my own strategy, and I end up on the losing side. But you learn from these lessons, and you have to stay true to your exact trading strategy.
Yeah, I mean, absolutely. But the thing is you learned from those lessons that you took on Docu, brought them right into Costco, and hit two fantastic plays.
Yeah, that's how it usually goes. Once you learn what you're doing, I think one strategy I'm gonna start implementing now is that I'm probably not gonna swing trade any ER contracts across the day unless I'm very, very, very highly confident that it's gonna be really good earnings.
Yeah.
I know that the earnings gonna blow out of the water. But sometimes if you get too cocky, you end up on the losing end of the
Yeah,
stick
you
too.
get humbled.
Yeah. So I think I'm gonna start implementing the strategy where I can trade contracts up before earnings, sell it for profits, because usually out of nowhere, huge amounts of buying volume comes in to buy those contracts. So that means you're up like 20%, 22%. I've seen the same thing for Docu actually as well. I was up 30, 40%. It was like $200 per contract. I was like, oh shit, like I'm already up even on my puts too. I did a little one put, but it was very interesting because I knew I should have sold, take the profits because it hit my price, like my general profit taking range. I
Yeah.
was like, I should have took 20, 22%. That was a perfect profit range. That was my strategy that I should have done. But me being the person who wanted to take the risk of ER, I regretted that decision afterward. I learned
Yeah.
from that mistake.
Absolutely.
So from now on, I'm just gonna trade before ER, sell it before ER occurs. Then the day after, what the numbers are, then I'll trade based on those numbers.
Valuable lesson.
Yeah.
And fantastic overview of this play that you took. I mean, I feel like I even completely understood your rationale for it, and you had a lot of confluences which pointed in your decision. So great play.
Yes.
Awesome, Andy. Well, thank you so much for walking us through it.
No problem. Thank you. Thank you
Cool.
for having me.
Absolutely. We'll see you in the next trade highlight.